Welcome to the deep dive, where we take that pile of sources you have and really distill them down into the crucial insights, the stuff you genuinely need to be well informed. Today, we are plunging right into, well, one of the biggest ongoing stories in the whole digital asset space, the future, really the intertwined futures of Bitcoin and Ethereum. And we're deliberately, stepping back from the day-to-day market noise, the hype cycles. We want to focus on the long view, 5, 10, maybe even 20 years out.
Yeah, it's a much-needed perspective, I think. The daily charts only tell you so much.
Exactly. So our mission here is to dissect the enduring impact of these two giants. We're going to dig into their foundational philosophies, their tech roadmaps, which are pretty different.
Very different, right.
And how they're getting into institutional finance, their global influence. The goal is to give you a clear, structured understanding of why these two innovations are really set to shape, well, maybe the future of finance and the internet.
It's a big claim, but the sources really back it up. They're foundational in different ways.
Totally. So whether you're prepping for a big meeting, just trying to keep up with this ridiculously fast-moving crypto space, or, you're just genuinely curious about the digital frontier this deep dive is for you, you're going to come away with, hopefully, a more nuanced perspective. Not just what Bitcoin and Ethereum are, but why they matter so differently, and how maybe counterintuitively they might actually complement each other. So let's unpack this.
It's interesting, isn't it, how the public story is always Bitcoin versus Ethereum.
Yeah, the rivalry narrative.
Right, like it has to be fight to the death. Yeah. But when you dig into the sources, like we have, you consistently see a much more complex picture. A more robust future, actually, where their different strengths kind of work together.
Synergistic, not competitive.
Exactly. It's about their unique roles, not some zero-sum game.
Okay, that perfectly sets the stage. Because to really get their future, you've got to start at the beginning. Their origins. For Bitcoin, its birth wasn't just, a tech breakthrough. It was a direct response to a global crisis.
Yeah.
How did that 2008 financial meltdown really stamp itself onto Bitcoin's DNA, its philosophy?
Oh, fundamentally.
Yeah.
Bitcoin came directly out of the ashes of 2008. The white paper dropped just weeks after Lehman Brothers collapsed.
Wow, that close.
Yeah, it wasn't a coincidence. It was like a visceral reaction to a system that many saw as broken. You had centralized banks making these opaque decisions, governments printing money, basically zero accountability. And the result was inflation fears eroded trust. Bitcoin was designed as the counter-argument, a way to opt out of a system that felt like it had failed.
So it's not just code, it's almost a political statement, a manifesto.
You could definitely see it that way.
And that philosophy clearly shows up in the design, right? Especially this digital gold idea. What specific architectural choices give Bitcoin that scarce, almost unchangeable quality?
Well, digital gold isn't just, a catchy phrase. It's hard-coded. The absolute key principle is the fixed supply.
The 21 million cap.
Exactly. 21 million Bitcoins.
Yeah.
Ever.
Yeah.
Enforced by cryptography. That scarcity, which no central bank could ever truly guarantee, that's what gives it the gold-like property as a store of value. And there's the deep commitment to decentralization. No single boss, no CEO, no government can just change the rules or grab your assets.
How does it achieve that, practically?
Through this global network of independent nodes and miners, thousands of them. It makes it incredibly resilient to censorship, to manipulation. It's trustless by design. Security and sovereignty baked right in.
And it's amazing how that one core purpose, being this solid, censorship-resistant store of value, seems to drive everything else about how it evolves. It feels very focused, deliberately simple almost.
Exactly. Bitcoin isn't trying to be the world computer or a platform for smart contracts. Its power comes from that laser focus on securing and moving value. And that focus dictates a development path that's inherently conservative.
Yeah.
Any upgrade, like Taproot recently, goes through years of debate, rigorous testing.
So that slow pace isn't a bug, it's a feature.
It absolutely is. It's designed to make sure those core pillars, security, decentralization, predictability, stay rock solid. That builds trust for the long haul. It's the ultimate do one thing, do it incredibly well philosophy.
Okay, so if Bitcoin is elegant simplicity, Ethereum feels like the opposite, like almost boundless complexity and potential. This idea of programmable money that immediately signals something way bigger than just sending value around, right?
Well, completely. It's a total philosophical split. Bitcoin gives you a secure ledger. Ethereum gives you a global decentralized computer, a platform where you can not only send Ether, its currency, but you can program that money.
Program it.
Yeah. Program it to do almost anything. Ether isn't just money. It's the fuel, the gas that powers computations on the network. That ability to run code, any code, just fundamentally changes what a blockchain can do.
Which is why the sources call it a canvas for innovation. It's not just one thing, it's like an operating system for building new things.
Exactly. It's an open invitation for developers.
And we've definitely seen an explosion of applications built on it. Maybe we can quickly run through the big categories for you just to highlight that potential.
Sure. Think about the key stuff thriving on Ethereum today. First, smart contracts. These are basically agreements written in code on the blockchain. They run automatically when conditions are met.
So cutting out the middleman, lawyers, banks sometimes.
Precisely. But it's deeper than just automation. It fundamentally changes how we think about trust. And it raises all sorts of complex legal questions about jurisdiction and what happens when things go wrong in a trustless system. Stuff legal systems are still catching up with.
Okay, what else?
Then you have decentralized finance, DeFi. This isn't just copying traditional banking onto a blockchain. It's about making financial services open, permissionless, globally accessible.
Like lending and borrowing.
Exactly.
Yeah.
Lending, borrowing, trading, all without the traditional gatekeepers. But it also brings new risks, right? Smart contract bugs, Oracle issues. It demands constant vigilance in risk management.
Right, and then the one everyone hears about, NFTs.
Non-fungible tokens. Yeah, beyond the digital art hype, the real long-term challenge here is building standards for digital property that work everywhere. How do you ensure real ownership, easy transfer as Web3 grows? Ethereum is where those standards are being hammered out.
Interesting. And the last big one.
Decentralized autonomous organizations, or DAOs. These are like online communities with bank accounts and rules encoded on the blockchain.
Governed by code.
And by the community members. They're exploring new ways of making decisions together, collective action. But they also face challenges of effective governance at scale, voter apathy, the clash between fixed code and, well, changing human needs.
Wow, okay, so each of those is pushing boundaries. When you pull it all together, smart contracts, DeFi, NFTs, DAOs, you really see Ethereum's big ambition to be the foundational infrastructure for the future, like the backbone of a new internet.
That's the grand vision, yeah. Ethereum isn't just aiming to be a financial layer. It wants to be the general purpose global computer that the next internet Web3 gets built on. It's about empowering people, fostering innovation outside the control of today's tech giants, redefining everything from digital identity to social media, supply chains, you name it. Hashtag 1.3, the profound impact of this philosophical divide.
Okay, so we have Bitcoin, the stoic digital gold, all about scarcity, security, and Ethereum, the ambitious innovator driving programmability ecosystems. These aren't just like academic points, are they? The sources hammer home that these core philosophies dictate everything that follows.
Absolutely. This isn't just theory. It's incredibly practical. It's the lens you need to understand their market behavior, their fights with regulators, their tech choices. It all flows from that philosophical DNA.
So how do these different philosophies specifically shape who uses them, the adoption patterns?
Well, Bitcoin's digital gold story naturally attracts those looking for a safe, long-term store of value, especially when the wider economy feels shaky.
So more conservative investors, institutions.
Yeah, traditional finance, hedge funds, even governments now. Whereas Ethereum, with its programmable money vibe, pulls in a different crowd. Developers, entrepreneurs, artists, gamers, people who want to build things, use the platform's utility. Its adoption is really tied to how lively its ecosystem is, not just people holding the asset.
And that difference directly influences how governments and regulators trying to deal with them. It seems like one has a much clearer path than the other.
For sure. And it forces regulators to ask tough questions. How do you regulate something simple and unchanging like Bitcoin versus this complex, constantly evolving world computer with endless applications? Bitcoin's relative simplicity, its clear function as a commodity like gold, has given it a, let's say, slightly smoother regulatory ride in many places. Ethereum, though, it's a platform for potential securities, some tokens, utilities like gas, even digital property, NFTs. That makes it a regulatory minefield, much more ambiguous. The philosophy directly creates the regulatory headache.
And finally, those core philosophies even dictate their tech strategies for handling more transactions, for scaling up. Their solutions reflect their priorities.
Exactly. Bitcoin's conservative nature means its scaling solutions, like the Lightning Network, focus on speeding up payments off the main chain to keep the core layer super secure and decentralized.
Keep the base layer pure.
Right. Integrity first, even if development is slower. Ethereum's grand vision, though, needs massive on-chain scaling to support all those complex apps. So they pursue really complex upgrades like sharding and layer 2 rollups, focusing on throughput and functionality.
But that comes with its own risks.
Definitely. More complexity means more potential bugs. And there's always this tension. How do you scale up massively without accidentally centralizing power? It's a constant balancing act for the Ethereum community.
Okay, we set the philosophical stage. Now let's see how this plays out in the real world, specifically institutional adoption. The sources really emphasize Bitcoin's rise as the darling of institutions. This feels like a major shift beyond just price watching.
Oh, it's been pivotal. For years, Bitcoin was kind of dismissed by Wall Street as this niche, weird, volatile thing.
Right, magic internet money.
Exactly. But its sheer persistence, its digital scarcity story, its growing market size eventually, serious institutions just couldn't ignore it anymore. And they're not just gambling. They're looking for genuinely new, uncorrelated assets, maybe hedges against inflation.
And we've seen some huge catalysts pushing this along. The approval of spot Bitcoin ETFs in the US and other places that felt like the biggest domino to fall. What was the real impact of that?
The spot ETFs were a game changer. Absolutely. Because suddenly, institutions and even regular investors had a familiar, regulated way to get exposure.
No more figuring out crypto exchanges or private keys if you didn't want to.
Precisely. You could buy it through your normal brokerage account inside a regulatory framework everyone understood. It massively lowered the barrier to entry. And maybe more importantly, it sent a signal of regulatory acceptance. Like, okay, this is a legitimate asset class now. That was huge for traditional players.
And it's not just investment products. We saw El Salvador actually make Bitcoin legal tender. Obviously controversial and challenging, but still groundbreaking.
Groundbreaking is the word. It went way beyond just investment. It was a whole national economic strategy.
Why did they do it?
Well, for a country dealing with dependence on the US dollar, high costs for sending money home from abroad, economic instability, Bitcoin seemed to offer a path to more financial control, more inclusion. Now, they definitely hit roadblocks with implementation. Public buy-in wasn't universal, but put the idea on the map. Could Bitcoin be sovereign money for some nations? Others are definitely watching, even if they're cautious.
We also hear about hedge funds using Bitcoin as a macro hedge. What does that mean in practice? How are they using it?
So a macro hedge is basically insurance against big economic risks, like runaway inflation, currency collapse, geopolitical chaos.
Stuff that affects everything.
Right. And hedge funds are increasingly adding Bitcoin to their toolkit for this because it doesn't move in lockstep with traditional stocks and bonds. It's uncorrelated. So when inflation spikes or faith in fiat currencies wobbles, Bitcoin's fixed supply and decentralized nature make it look like a potential safe haven, kind of like digital gold. It's a strategic bet against systemic failure.
So putting it all together, the ETFs, El Salvador, the macro hedges, it really feels like Bitcoin is systematically entering the traditional financial bloodstream, as the sources say. It's becoming more understood, more integrated.
And what's striking is how fast this has accelerated, especially in the last few years. It's a huge validation of Bitcoin's original idea, right?
Yeah.
Moving from the fringe to being a recognized, albeit still new, asset class, it signals a really fundamental shift in how global finance sees digital assets. And Bitcoin's leading that charge because its value proposition is so clear. Hashtag tag 2.2 Ethereum's complex regulatory journey.
Okay, so Bitcoin seems to be finding its lane in traditional finance, helped by that relatively clear commodity status. But as you mentioned, the sources describe Ethereum's regulatory path as way more complex. Why is it so much trickier for regulators?
It really stems directly from what we talked about earlier. Its design as this multi-purpose, constantly changing platform.
It's not just one thing.
Exactly. Bitcoin is mostly just a store of value and payment network. Pretty straightforward to categorize. But Ethereum, it's an operating system, a development platform, a marketplace, and a currency. How do you fit that into old legal boxes? Regulators really struggle.
And specific changes within Ethereum itself have thrown fuel on the fire, right? Like the merge and the big shift to proof of stake. That seems to have opened a whole new can of worms, classification-wise.
The merge was this amazing technical achievement, right? Switching from proof of work to proof of stake, slashing energy use, huge win.
Right.
But it created new regulatory headaches. Because under proof of stake, users stake their Ether to help run the network, and they earn rewards for doing so.
Okay.
Well, that act of staking, investing something, ETH, with an expectation of profit generated by the efforts of others, the network validators and developers, that sounds an awful lot like an investment contract to some regulators, especially the SEC in the US.
The Howey test. So staking could make ETH look like a security, unlike Bitcoin, which is pretty much accepted as a commodity.
That's the massive question. and it could totally reshape Ethereum's future. The SEC uses the Howey test to decide if something's a security. And yeah, staking arguably ticks some of those boxes. If ETH were officially deemed a security, it would bring a whole different, much heavier layer of regulation down on the network. Developers, stakers, exchanges. It would have huge global implications for how it's traded, developed, everything.
And just the fact that Ethereum keeps evolving so fast, all the upgrades we discussed, that must make it even harder for regulators to pin down. It's like trying to regulate something that keeps changing shape.
Totally. Regulators are used to dealing with static things or things that change slowly. Ethereum is the opposite. By the time they might wrap their heads around one feature or application, the network is already upgraded. New apps have launched.
It's a moving target.
Exactly. It makes consistent forward-looking regulation incredibly difficult. Often, they're just reacting to what already happened.
So we're stuck with this huge unanswered question for regulators. Is it a commodity, a security, a tech platform? And the answer, as the sources say, may shape its future more than price ever could. Why is that classification so fundamental?
Because it dictates everything else. If it gets commodity status, like Bitcoin, that generally means lighter regulation, more freedom to innovate. If it's deemed a security, the compliance costs and restrictions become immense, potentially choking innovation and fragmenting its global use. If it's treated as a tech platform, maybe entirely new rules are needed. The legal label determines its operational freedom, who can invest easily, its whole role in the global digital economy. The stakes are just incredibly high. It's not a trivial debate.
Okay, shifting from regulation to the tech itself. We've touched on this, but let's dive into how those core philosophies shape their actual development roadmaps. Bitcoin's approach is consistently called conservative. Prioritizing stability, security above all else, it sounds almost ideological.
It kind of is. I mean, think about it. If Bitcoin aims to be digital gold, the base layer for a new financial system, any change is incredibly risky. A serious bug could destroy trust, crater the value.
Right.
So the whole development community operates with extreme caution. The philosophy is basically, first, do no harm. Don't break what works.
And that leads to that slow and deliberate pace of change we talked about. Upgrades like Taproot happen, but they're rare and take ages.
Correct. Taproot, which brought in things like Schnorr signatures for better privacy and efficiency, that was years in the making. Years of debate, testing, getting everyone on board. This slow, methodical process directly reflects that core priority. Security and decentralization first. Every change gets intensely scrutinized by this huge distributed network of developers, miners, node operators. It's designed to resist quick top-down decisions. It's like cautious democracy in action.
So that slowness isn't weakness, it's a calculated feature to preserve integrity. It's about being utterly reliable.
Precisely. If you want to be a global store of value, sound money, then predictability and immutability are everything. The slow pace is how Bitcoin builds that deep long-term trust. It reinforces its status as this digital bedrock. Hashtag tag 3.2 Ethereum's rapid and ambitious evolution.
Okay, now let's flip the coin entirely. Contrast that deliberate pace with Ethereum. The sources call its development the opposite. A network evolving rapidly, constantly upgrading. It sounds less like a bedrock and more like a rocket ship under construction while it's flying.
That's not a bad analogy. Where Bitcoin locks down stability for its one core job, Ethereum's dream of being the world's computer requires constant evolution. It has to keep getting faster, cheaper, better to support this booming, complex ecosystem of apps. It's built for change, for reinvention.
And that drives a super ambitious roadmap, lots of major upgrades. Let's quickly hit the highlights again, starting with the merge. We know it switched to proof of stake, but what was the strategic play there beyond just saving energy?
The merge was massive, yeah. The energy saving was huge, obviously, and great for optics. But strategically, the main goal was to pave the way for future scaling. Moving to proof of stake made things like sharding technically feasible in a way that was incredibly difficult, maybe impossible under proof of work. It was a foundational, high-risk move to unlock the next level of network capacity.
Okay, so that leads us to sharding. How does splitting the network into smaller chains help it handle way more traffic?
So sharding basically divides the Ethereum blockchain into many smaller parallel chains, the shards. Instead of every computer on the network, every node having to process every single transaction, each shard handles its own set of transactions simultaneously.
Like adding more lanes to a highway.
Exactly. It dramatically boosts how many transactions the network can handle per second. And importantly, it also reduces the amount of data each individual node needs to store and process, which helps keep the network decentralized by making it easier for more people to participate.
Then we have Layer 2 rollups, which seem to be making a big difference already with fees and speed. How do these off-chain solutions work with the main Ethereum chain?
Layer 2s are really clever. They basically batch up thousands of transactions off the main Ethereum chain, process them super efficiently there, and then post a compressed summary of those transactions back onto the main chain.
So the heavy lifting happens elsewhere.
Right. It drastically cuts down fees and speeds things up for users, but you still inherit the core security of the main Ethereum network. Projects like Arbitrum, Optimism, ZK Sync, they're vital for Ethereum scaling right now.
And one more, account abstraction. This sounds more about user experience, making Web3 less clunky.
Yeah, account abstraction is huge for usability. It basically makes user accounts, wallets themselves act like smart contracts.
What does that allow?
All sorts of cool stuff. Think easier ways to recover lost keys, setting spending limits, paying transaction fees in tokens other than ETH, having multiple people control one account without complex setups. It's about hiding the raw crypto complexity and making Web3 feel more like the smooth apps people are used to.
Okay, so each of these upgrades, the merge, sharding, rollups, account abstraction, it feels like they're all pushing Ethereum closer to that ultimate goal, being the backbone of Web3, the operating system for the decentralized internet.
That's absolutely the vision. Ethereum is pushing relentlessly to be that general-purpose computing layer, not just for finance, but for decentralized social media, gaming worlds, supply chains, digital ID, everything built on this open, censorship-resistant foundation.
But all this speed, this complexity, it has to come with risks, right?
Yeah.
The sources mentioned secure scaling and maintaining decentralization as big challenges. Sound like a tightrope walk.
It absolutely is. Complexity breeds risk. Number one, can you keep adding all these features and scaling solutions without accidentally introducing security holes? The more complex the code, the more places bugs can hide. And number two, that decentralization balance. As the tech gets more complex, does it become harder for regular people to run nodes or participate as validators? Could power accidentally concentrate in the hands of a few big players, like large staking services? The Ethereum community is constantly debating and working on these trade-offs. It's security and scalability and decentralization. Tough combo.
All right, we've mapped the tech paths. Let's look at the real-world impact. How are these different approaches actually changing things globally? Starting with Bitcoin, the sources highlight its role as a lifeline, especially in places with serious economic instability. That feels really powerful.
It really is. I mean, for millions of people dealing with hyperinflation, strict capital controls, or just unreliable banking, Bitcoin isn't a speculative toy. It's a tool for survival. It lets them preserve wealth when their local currency is collapsing. It lets them receive money from family abroad without crazy fees or government blocking it. It gives them a way to transact when the official system fails them. It's financial freedom in places that desperately need it.
And what specific features of Bitcoin make it so valuable in those situations?
Well, three main things jumped out. First, portability. You can send huge amounts of value anywhere instantly. No borders, no permission needed. Second, censorship resistance. No government, no bank can stop you from accessing or sending your Bitcoin. That's huge if you're under an oppressive regime or facing sanctions. And third, it's inflation-proof. That fixed supply means it holds value against depreciating fiat currencies. It's a stable anchor in a financial storm.
So if it's a lifeline for individuals, does that scale up? The sources suggest a long-term vision where Bitcoin could dominate as a reserve asset. Are we talking central banks holding Bitcoin like they hold gold?
That's the really big, bold idea, yeah. And it's not totally crazy. The same things that make it good for individuals, scarcity, neutrality, cannot be seized easily. Could also appeal to nations looking to diversify their reserves away from, say, just the US dollar or euro, especially in a world with more geopolitical tension and economic uncertainty. Holding a decentralized, borderless asset like Bitcoin could become a serious strategic move for central banks, a truly independent store of value. It would be a massive shift in global finance. Hashtag 4.2, Ethereum's powering of decentralized ecosystems.
Okay, now let's switch to Ethereum's impact. The sources talk about it powering entire ecosystems of decentralized apps and services. This sounds much broader than Bitcoin's focus, reaching beyond just money.
Absolutely. Bitcoin provides that core, sound money layer. Ethereum provides the layer to build almost anything on top of a decentralized base. It's the infrastructure for a whole new digital economy, finance, culture, gaming, identity, everything.
Let's look at some examples. Decentralized lending protocols. How are they shaking up banking without being banks?
DeFi lending platforms let you lend out your crypto to earn interest or borrow against your crypto, all governed by smart contracts. No bank needed as the middleman.
Peer-to-peer?
Exactly.
Jeff.
It cuts out the intermediary, makes it potentially more open, maybe more transparent, often with different rates than you'd get traditionally. It's disintermediation in action.
And stablecoins. They seem essential for making crypto usable day to day.
Stablecoins are crucial. They bridge the gap between volatile crypto and stable fiat currencies, like the dollar.
So you can transact without worrying about the price crashing tomorrow.
Right. They let people trade easily, make payments, use them as collateral in DeFi, all with the speed of the blockchain, but the stability of fiat. They're like the essential lubricant for the whole DeFi machine.
And moving beyond finance, gaming economies on Ethereum, what does true digital ownership mean for players there?
It means when you earn or buy an item in a game, a sword, a skin, whatever, you actually own it as an NFT.
Not just renting it from the game company.
Exactly. You genuinely possess it. You can sell it on open markets, trade it, maybe even use it in other compatible games someday. It empowers players, lets them potentially earn real value from gaming, and breaks open those closed ecosystems where the developer controls everything.
So looking at all this DeFi, stablecoins, gaming, DAOs, the long-term vision starts to click into place. Ethereum as the operating system of the decentralized internet. Not just finance, but the foundation for everything digital.
That's the goal. A world where your digital identity, your data, your money, your creative work, your social connections may be all secured and managed on this open, decentralized infrastructure. Ethereum wants to be that invisible, essential backbone for Web3, reaching way beyond just finance into almost every part of our digital lives. Hashtag 4.3 shared challenges for both giants.
Okay, it's clear both Bitcoin and Ethereum are charting these world-changing paths, but it's not all sunshine and rainbows. Even for these two giants, there are major roadblocks. The sources point out they face common, serious challenges. It's not an easy ride for either of them, is it?
Definitely not. They have their own specific tech and regulatory hurdles, sure, but there are these bigger, almost existential threats that loom over the whole decentralized space. And both Bitcoin and Ethereum are right in the thick of dealing with them.
The biggest one, probably the most public one, is the whole energy debate. That seems to stick around even after Ethereum's merge.
Yeah, the energy use, especially of proof of work like Bitcoin, has been a huge issue. Critics point to the environmental impact, and that pressure isn't going away.
Yeah.
Now, Ethereum's move to proof of stake massively cut its operational energy use, which was a big deal. But the broader sustainability discussion continues. Where does the energy come from? What's the footprint of making the hardware? It's a constant scrutiny that the whole industry, including both Bitcoin and Ethereum, has to keep addressing with real solutions to maintain public and political support.
And then there's the sci-fi sounding one, quantum resistance, a future threat but potentially devastating.
Right. This is the long-term worry about quantum computers becoming powerful enough to break the cryptography that currently secures blockchains.
So they could potentially steal funds or disrupt the network.
Theoretically, yes. If a powerful enough quantum computer existed, it could potentially figure out private keys from public keys, breaking the fundamental security model. Now, this is likely still years away, and people are already working hard on developing new cryptography that is resistant to quantum attacks. But it's a serious long-term threat that both networks have to prepare for. Future-proofing is key.
And lastly, just plain old political pressure. Governments, regulators, global bodies, they're constantly trying to figure out how to handle this stuff.
And that pressure comes in all forms. New laws, specific regulations, classification battles like we discussed, sometimes just public FUD campaigns, geopolitical games. Governments everywhere are wrestling with how to tax, regulate, or even control technologies that deliberately ignore borders and bypass traditional gatekeepers. This constant pressure shapes market sentiment, influences institutional decisions, and impacts how freely these networks can operate and grow globally. It's this ongoing push and pull between innovation and control.
Okay, so we've gone through the philosophies, the tech, the regulation, the real-world impact. And what really stands out for me, pulling it all together, is that core idea from the sources. Here's the truth. Bitcoin and Ethereum aren't rivals. They're complementary forces. That feels like the key takeaway. It reframes the whole thing.
It's absolutely crucial, and it makes you wonder, why is the common story always about rivalry? Because when you look closely, technologically, philosophically, economically, they're built for different but equally vital jobs in a decentralized future. It's like they're different organs in the same body, both essential but doing very different things.
And the sources lay out those complementary roles pretty clearly. Bitcoin as the anchor, what's that really mean? Preserving wealth, stability,
Yeah, the anchor means Bitcoin is positioned as the stable, unchanging foundation, the bedrock. It's designed purely to preserve wealth, long-term resistant to inflation, censorship, control. Think of it as the ultimate digital reserve asset, the neutral ground, purely focused on storing value securely. Its scarcity, its security, that's its purpose. It provides the stability the rest of the ecosystem needs to build upon.
And if Bitcoin is the anchor, Ethereum is the engine, the thing that creates wealth and innovation. So Bitcoin holds the gold, Ethereum builds the factories.
That's a great way to put it. If Bitcoin preserves wealth, Ethereum is the dynamic engine that creates new forms of wealth, new businesses, new applications. Its programmability unleashes all that innovation. We talked about DeFi, NFTs, DAOs, constantly generating new economic activity. It's the platform for building, for experimenting, for creating the services of the future internet. It takes the stable base Bitcoin provides and builds this vibrant, expanding digital world on top. Different jobs, both indispensable. Hashtag 5.2 envisioning the future in 10 years.
Okay, so if they are complementary, let's look ahead, say 10 years. What could this synergistic future actually look like? The sources paint a pretty bold picture for Bitcoin's potential integration at the highest levels.
Yeah, the idea is that in 10 years, we might actually see Bitcoin held by central banks. Not just hedge funds or companies, but nations holding it in their reserves.
Wow.
That would signal its ultimate arrival as a globally recognized, non-sovereign reserve asset, a hedge against instability for entire countries. Sitting alongside gold or other traditional reserves, it would fundamentally rewrite parts of global monetary policy.
And for Ethereum, the vision seems almost bigger, more pervasive, powering global financial infrastructure, like it's running things behind the scenes everywhere.
Exactly. The vision is Ethereum as the invisible, critical backbone for tons of global commerce and services. Imagine international payments settling instantly on Ethereum-based stablecoins, or global supply chains tracked transparently using smart contracts, or tokenized stocks, or real estate trading seamlessly across borders. Ethereum would be that programmable base layer, making all these complex, interconnected systems work efficiently, openly, without relying on single points of control. It would be woven into the fabric of global digital life. Hashtag 5.3 acknowledging dynamic evolution.
Those are powerful visions. Bitcoin as the global reserve anchor, Ethereum as the global infrastructure engine. But we have to be realistic. The tech world moves fast. The sources wisely caution, or you may see new challengers rise. We can't assume today's leaders are forever.
That's a super important reality check. This space is evolving incredibly quickly. Bitcoin and Ethereum have massive advantages right now. Network effects, established communities, tons of infrastructure built around them. Huge head start. But innovation doesn't stop. Could a new blockchain emerge with radically better tech? A different consensus model? A new approach to decentralization? Absolutely. New challengers could definitely carve out niches or even pose serious threats down the road. This field is still so young and dynamic.
But for the foreseeable future, despite that potential for new players, Bitcoin and Ethereum's current dominance seems pretty secure, right? As the sources conclude. But for now, these two remain the pillars of crypto's future.
Exactly. Their track records, their resilience, their security, their deep integration, already it gives them a massive incumbency advantage. They've shown they can adapt and execute on long-term visions. While other projects will definitely innovate and find roles, Bitcoin and Ethereum currently offer the two most compelling, widely adopted blueprints for a decentralized future, each playing a distinct and vital part. Hashtag tag outro.
Wow, what a journey through the futures of Bitcoin and Ethereum. We've covered their core differences, their tech paths, the regulatory maze, their global impact. We've seen Bitcoin as that solid anchor, digital gold born from crisis, and Ethereum as the dynamic engine, programmable money driving innovation from DeFi to NFTs and way beyond. And the big takeaway, the really powerful insight we pulled from sources, is that this isn't a rivalry, they're complementary forces, both essential but for very different reasons, shaping this decentralized future together. So now I really encourage you to think about what that means. These distinct roles, which one resonates more with the future you see? Is it Bitcoin's unwavering stability and decentralization? Or is it Ethereum's ambitious dynamism and potential for endless innovation? How might these two different philosophies shape the world you'll be living and working in? It's worth pondering how they might interact in ways we haven't even seen yet.
And building on that, here's a final thought I want to leave you with. We acknowledged new challengers could emerge. So ask yourself, what would it actually take? What specific, maybe revolutionary features or tech breakthroughs or even massive shifts in global needs would a new project need to truly challenge the dominance of Bitcoin or Ethereum? Considering their huge networks, their dedicated communities, their established ecosystems, what would it genuinely take to disrupt these two entrenched pillars? Thinking about that really highlights just how much innovation might still be ahead in this entire space.
That's a fantastic question to chew on, because this isn't a finished story. It's a technological revolution happening right now. Understanding these core pieces, Bitcoin, the anchor, Ethereum, the engine, is absolutely vital if you want to navigate the future of finance, the future of the internet. We really hope this deep dive has given you that nuanced perspective, sparked your curiosity, and equipped you to better understand and engage with this incredible evolving landscape. Keep exploring, keep asking questions. Until next time.